Level 1. $0 to $1,000. You are not a customer. You are a liability. You walk in with nothing. Maybe $100. Maybe $300. You need a checking account because you need somewhere for your paycheck to land. The bank opens an account for you. They smile. They give you a debit card. And then they immediately begin making money off the fact that you have almost nothing. Here's what they don't tell you at that meeting. If your balance drops below the minimum, and at this level it will, they charge you a monthly maintenance fee, somewhere between $10 and $15, every month, on an account with almost no money in it. Think about what that means. If you have $300 in your account and the bank charges you $12 a month to hold it, that's a 4% annual fee, paid to them, by you, for the privilege of being their poorest customer. And it gets more targeted than that. Overdraft fees. You spend $6 more than you have, and the bank charges you $35. Some banks process transactions in a specific order, largest first, specifically to maximize the number of overdraft events in a single day. This is documented. It is legal, and it happens almost exclusively to customers at level 1. The bank is not your financial partner at this level. You are a fee generation event. Level 2, $1,000 to $10,000. The fees get quieter. The indifference stays. You've got some money now. Not a lot, but enough that the monthly maintenance fee disappears. You cleared the minimum balance threshold. The penalty economy turns off. But what turns on is almost nothing. You have a savings account earning somewhere between 0.01 and 0.5% interest. If you have $5,000 sitting in that savings account for an entire year, the bank pays you somewhere between 50 cents and $25. Meanwhile, the bank takes your $5,000, lends it to someone else at 7, 10, sometimes 20% interest, and keeps the difference. You are the raw material. The deposit is the inventory. You just don't see the margin because it's never shown to you. At level 2, you still wait in line. You still deal with whoever is free at the teller window. You have no advisor, no contact, no one whose job it is to think about your money. You have a login, a routing number, and a 1-800 number with a 40-minute hold time. Level 3, $10,000 to $100,000. Something shifts, but not enough. This is where banks start to see you differently, not because they care about you, but because your balance is now meaningful inventory. You might qualify for a premium checking account. The fees are gone. The savings rate nudges up. Still almost nothing compared to what they're earning on your money, but the number moves. Here's what actually changes at level 3. You become eligible for things. A personal loan at a lower rate. A credit card with real rewards. A mortgage pre-qualification that a level 1 customer couldn't access.
The bank starts lending you back a portion of the value you've deposited. That's what credit is. At this level, you're finally worth lending to. But here's the thing nobody tells you at level 3. The bank still doesn't call you. Nobody reaches out to say, here's a better rate. Here's a product that serves you better. Here's something we noticed about your account. You have to find everything yourself. You have to ask. You have to know what questions to ask. The system is not designed to help you optimize. It's designed to hold what you've deposited until you need it, and charge you as little as possible for holding it. Because losing you now would cost them a meaningful deposit. Level 3 is where you start to have leverage. Most people at level 3 don't know that yet. Level 4, $100,000 to $500,000. They notice you now. Something happens when your balance crosses 6 figures. The bank starts paying attention in ways that weren't visible before. You get a phone number, not the 1-800 number, an actual direct line to someone who works at the branch or the regional office. They call it a relationship manager. What it actually is a retention tool. Your account is now large enough that losing it would matter. The rate on your savings account becomes negotiable. Most people don't know this. You can call your relationship manager and say you've seen a better rate elsewhere. They will often match it or beat it. The posted rate in the window is not the only rate available. It's the rate for people who don't ask. Your loan applications process faster at this level, not because the rules are different, because the person reviewing it knows your name and has an incentive to keep you happy. This is where the bank starts behaving like a business that wants your business. Below this level, you are an account number. At level 4, you're a relationship. The difference isn't just language. It shows up in every interaction. How long you wait, who calls you back, what rates you're offered, how exceptions are handled when things go wrong. Level 4 is the first level where the bank actually works for you, not just off you. Level 5, $500,000 to $1 million. You get a different floor. At $500,000, most major banks move you into a dedicated wealth management tier. The language changes. You're no longer a retail customer. You're a high net worth client. What this means practically, a dedicated advisor who holds a licensed financial credential. Quarterly portfolio reviews. Proactive calls when market conditions change. Access to products that don't appear on the public website. The interest rate conversation completely inverts here. Where a level 1 customer was being charged fees for having too little, a level 5 client is being actively offered better rates, waived fees, and preferential terms, because the bank wants to deepen the relationship before you move your assets somewhere else. This is also where the bank starts functioning as more than a bank. Estate planning referrals, tax strategy introductions, insurance products, legal partnerships. The bank is now positioning itself as the hub of your financial life. Because if they can capture your full financial picture, you're far less likely to leave. And you start to see something for the first time. The same institution that charged a level 1 customer $35 for a $6 overdraft is now waiving your annual fee, covering your wire transfer costs, and sending someone to your office for a meeting. Same bank, different person, different rules. Level 6, $1 million to $5 million. The private banking door opens. There is a door inside most major banks that most customers will never walk through. It doesn't have a sign that says private banking. It's usually an office suite, sometimes a separate floor, sometimes a separate building entirely. And the clients who use it don't talk about it. At $1 million in investable assets, you become eligible for private banking at most major institutions. What you receive is not a better version of the same service. It is an entirely different product category. Your private banker has one job: to make your financial life frictionless. Not just to hold your money and give it back when you ask, to anticipate what you need, present options before you realize you're looking for them, and make sure no competitor bank can offer you something you're not already getting. Transaction limits stop mattering to you here. Wire transfer fees disappear entirely. Foreign exchange rates improve. Your money moves the way money is supposed to move when it's big enough to move freely. You also receive something at level 6 that's almost never discussed: discretion. The bank assigns people to your account who understand that your financial information is sensitive. Requests are handled quietly. Documentation is minimal. The paper trail that level 1 customers generate every time they move $20 becomes invisible at level 6. This is the level where the bank stops feeling like a service and starts feeling like infrastructure. Something that runs in the background of your life, invisible and reliable. The way electricity runs through a building. Level 7, $5 million to $10 million. You stop going to the bank. The bank comes to you. There is no version of level 7 that looks like standing in line. Your private banker, or team of them, coordinates meetings at your office, your home, or wherever you prefer. The bank's priority is access, and access means fitting around your schedule, not theirs. The products available to you at this level include things that are not publicly listed: structured deposits with custom terms, access to private credit markets, investment opportunities that are not available to retail investors under securities regulations. Not because of corruption, because of legally defined investor qualification thresholds that most people will never reach. Your money, parked with the bank, is now large enough to matter to their own balance sheet. This means you have negotiating power that operates at a completely different scale than anything at previous levels. The bank needs your deposits. That need is real, and it shows up in every conversation. You also begin to exist in a different compliance world. The bank's anti-money laundering systems, which automatically flag unusual activity for level 1 and level 2 customers, are handled differently for clients at this tier. Not turned off, but managed through relationship rather than automated process. When something unusual happens in your account, a person calls before a restriction fires. Level 8, $10 million to $25 million. Your name is known before you arrive. There is no intake process at level 8. There is no application, no waiting period, no review. You are recruited. Banks at this level operate a dedicated, ultra-high net worth team whose job is to identify, approach, and onboard clients with assets in this range. They track public information, real estate transactions, company exits, inheritance events, and reach out proactively. The relationship begins before you've walked through the door. Your banking team at this level typically includes a lead private banker, an investment strategist, an estate planning specialist, a tax liaison, and a dedicated operations coordinator who handles execution. This is a team built around one client relationship, yours. The return on your assets becomes a negotiation, not a rate card. Your banker comes to meetings with a proposal. You respond with what you need. The terms are built around your specific situation: tax exposure, liquidity requirements, generational goals, philanthropy structures. The product doesn't exist until they build it for you. This is also where banking intersects with legacy. Trusts are structured. Family governance conversations begin. The bank isn't just holding your money now. It's helping you decide what happens to it when you're not here, and how the people who come after you will interact with the same institution decades from now. Level 9, $25 million and above. The bank is a partner, not a service. At $25 million, you are no longer a client of a bank. You are a counterparty. The language of the relationship changes at this level in ways that most people outside it never hear. The bank no longer presents products to you. You and the bank negotiate terms together. You have advisors, independent advisors, not employed by the bank, whose job is to represent your interests in those negotiations. The bank knows this and expects it. Access to capital at this level is almost frictionless. If you need $100 million to close a real estate transaction this week, the bank can structure that. Not because of your relationship, because your assets represent meaningful collateral that the bank has full visibility into. You have what's called a private credit facility, essentially a line of credit against your assets that you can draw on without selling anything. The wealthy don't sell assets to spend money. They borrow against them at rates so low and with tax implications so favorable that it's almost always smarter than liquidation. This is how the same people get richer while paying almost no income tax. They never sell. They borrow. They live on the loan. The asset keeps appreciating. The bank gets paid interest. Everyone wins except the tax base. And here's the thing that brings it all together. Every person at every level in this video is a customer of the same institution. The person at level 1 paying $35 for a $6 overdraft. The person at level 9 borrowing $100 million against their portfolio at 2%. Same building, same logo, different world. What changes between those two people isn't the bank. The bank is identical. What changes is the power dynamic. At level 1, the bank has everything you need and nothing to lose. At level 9, you have everything the bank needs and everything to gain. Money doesn't just buy things. It changes the nature of every institution you walk into. It changes the rules. It changes who calls whom. It changes who waits and who is waited on. And the most important thing this video can leave you with, more important than any specific rate or product or private banking floor, is this. The bank that exists for the person you are today is not the bank that will exist for the person you're becoming. Every level you climb, the institution changes. Not because they're generous, because you've changed the math. And the math is the only thing a bank has ever actually cared about. Subscribe. Every video on this channel shows you exactly what changes as the levels change. Not just in banking, but in every system you move through. The next one might be the one that shifts how you see all